All right, it looks like we are live. So this is Tim Picciott, the Liberty Advisor, joined with John Snyson, the Economic Truth, and man, have we got a lot of stuff going on today. So first off, I think what I want to do is roll through what the major market averages are doing. So we've got the Dow down 1,700 points, or 6.5%, more than 6.5. S&P is down 185 or 6.24 for the day. Nasdaq down 5%. The volatility index, that one's up big time. That one's up 10% today. Yeah, FTSE, that's down 8%. A lot of other European markets, we're looking at down 8, 9%. Just pretty much a complete bloodbath across the board. Athens down 13%. Everything is just down. Then we, take a look at the oil markets. Crude oil down 20% for the day. Brent crude down 21% for the day. Gasoline down 15%. Lots of craziness going on. Then, I mean, you think it's going to stop there? I mean, let's just go over to the bond market over here, where we have all-time lows. I think it was the first time ever that we had every single major market average, every single major bond yield was below 1% at one point during the day. Not quite there right now. We have the 30-year sitting in at 1.01%. I think at one point it was down to like zero point 0.8 something last night. 20-year at 1.0.
34. I think it was 34. The 30-year.
Point,
37 even, I think it was basis points. It was ridiculous.
no way, it got down to 37 basis points at one point. Holy crap! That's
No,
so. Oh,
yeah, it was at 0.84, I believe, last night when we were looking at it. It was ridiculous, the swings.
yeah, and right now we do have John coming live from where are you coming live from, if you want to say?
I'm caged in. I'm the police got me. The
Yeah,
popo. No, I'm just joking. I'm just sitting in my car. I'm just out working here at a beautiful actual place called Pine Falls Power View in Manitoba. And yeah, we just actually I'll show you quickly here. You got the beautiful river down there. So it's a nice view to sit here and talk economics with you, Tim.
yeah, no, it's great. And another thing that's actually going on too. I mean, there's no relief in the crypto markets. You got them. I mean, Bitcoin's down almost 10. Most of the altcoins, just quickly glancing, they're down more than 10. 13, 14%. So there's really just has been no relief anywhere. Just absolute craziness. And as I mentioned earlier, this is one of the worst. Basically opens ever. I believe this is the third worst open ever. The only opens that have actually been worse than this have been 9/11 and I believe the day after Lehman Brothers collapsed are the only two that have been worse than this. So here we go.
So
S&P,
it wasn't Black Monday? Black Monday is not there?
that wasn't an opening. That was
Oh,
during
I
the
see.
day.
Okay. Yeah.
So we
Gotcha.
actually opened up limit down,
Yeah.
meaning I think we're down. I think you've got to be down like 5 or 7% for that to happen. But I'm pulling up a CNBC article right now that shows S&P 500 ETF just had its third worst open ever, behind only the financial crisis and 9/11. And
One day they halted trading.
so
50 minutes.
it started off where it was halted because it was down 7%. And so just for
It
the
was
people,
it was down, Tim, it was down 8.8% at the lowest. It was ridiculous. And then it just like froze. And then it was, I think they actually stopped trading twice or something. It was pretty crazy this morning. So circuit breakers really kicked in there. They got everything under control. Now as it, open up again, suddenly jumped 2% pretty fast. So they just needed to get the plunge protection team in place so they could, come in and buy some assets, the primaries, the Goldman Sachs and JP Morgan's. Even JP Morgan was down. Last I looked, it was down 13%, Tim. And of course, oil producers, they got whacked. They are down some of them are down as much as I think like 60% on the day. So they're really getting massively whacked, because what we got to understand with the oil crash here and the oil war that's going on between Russia and Saudi Arabia is that now, of course, in the middle is the United States, where the cost of actually producing the shale oil, which is how the U.S. Recently got to the point of being the number one producer in the world. That is way I believe it's like $60 or $70 per barrel in cost to extract oil. And so you're looking at, like, right now, what's the VTI oil price at, Tim? It's at, like, what is it, 34, 35? What is it laying out right now?
I know I don't have that one quite pulled up right now. Okay, here we go. We're getting the commodities. So if
Yeah.
you guys are taking a look at my screen, we got crude oil sitting in at 33.42, Brent crude at 36. What were you trying to look
Yeah,
for?
so the crude oil is the VTI.
Okay.
So yeah, so as you can see, and also the Brent oil, which is the North Sea oil from Norway and northern England. That oil as well, needs a minimum of 60. I think a lot of platforms, some of them in Norway, I think the lowest ones need 60 oil price to break even. And then I think it's on the high end. There's some that are more worse off that needs as high as $66 a barrel. So as you can see, they're getting really whacked. But then on the other side, you got this crazy numbers. Tim, if you can go to the actual Discord, I did share something just very recently about the extraction costs of oil, just to show our viewers what actually is going on with oil.
I'm gonna have to scroll way. I'm gonna have to scroll way the hell down. Sorry to interrupt you there. So I'm only at 9:32 in the morning, and I just have to go all the way down. And so, I mean, if you guys want to see a group that's absolutely on fire right now, we do have the Bitly link that's on screen. We haven't really promoted it too much, but we've got John in there constantly. A lot of heavy hitters in there. I'm posting a lot of articles. I haven't commented as much as I would like, but where was this, John? What am I looking for here? We got a lot of stuff.
If you go, like, it's basically like I shared it probably like around 9:30, 9:40 something, 9:50 maybe. And what it was basically I was sharing some stats on how much it costs to extract oil around the world. I don't know, like if you can actually find it or not, that's okay. But I think I do remember
9:30 your time, or
well, yeah, so like Central Time, so that would be like cool. 11 your time or something. But anyways, we don't really need it, but I believe it was about $3 it takes for the actual the Saudis to actually make a profit on their oil, which is ridiculous to them. They have like a straw in the ground and it's just pouring out. That's how easy it is for them to extract their oil. So they're and it's a reason why the whole petro system was backed by Saudi oil to begin with, because of that very reason. And so you're seeing the Saudis, they could go on with a heavy war. And of course Putin just came out in the morning and in our time, and he was saying that we could withstand for 10 years oil being at 30 to 25%. Then it was a zero.
I've got that pulled up right now from Chris Garbat. So thank you, Zafoy, for that one.
Yeah, and then it was, I believe it was the Saudis said like, well, we could keep it at 20 for forever. So you're basically screwed. So and the big thing here, what we got to remember, why is this happening as well, is on the other hand, is there's some huge geopolitical things going on right now. I don't know if you guys have paid attention. The stock market doesn't seem to care at all about the declared war between Syria and Turkey happening right now in Syria. And what you got to remember with Syria is landlocked. So actually, the Saudis really wants to put a straw and compete with the Russians in Europe on the energy markets, but they need to get a pipeline into Europe. And because it's landlocked by Syria, I believe the NATO nations are working together with the Saudis and trying to help them to draw and get into Europe, because Germany and others are very heavily reliant on Russian oil and natural gas. So there's another thing here like going on right now. The war, like Turkey trying to take over Syria, and they're really trying to fight them. And so it's very interesting, Tim. It's very interesting, Tim, as you can see that the Russians are really, it's a battle of geopolitics here on top of what's happening with the total falling apart of OPEC. I believe that OPEC is done. Any cartel, Tim, and we know we got the central bank cartels is probably the next one to fall here, but we got the OPEC. It seems to have totally fallen apart here. We have Russia on the one side not budging, and then you have on the other side you have all the Arab nations that are really trying to fight against the Russian dominance in Europe, because they really want to control the European. They want to have a huge piece of the European energy markets, which Russia is not letting them, and that's why Russia is in Syria as well, fighting against the Turks and so on. So it's just a huge, crazy calamity on top of what we're seeing, the oil price fight, where there's actually a real war going on right now in Syria, which has kind of been a proxy war for a long time, but now actually the Turks just declared war on them just like I think it was like 3-4 days ago.
Yeah, and then how about you've got MBS, Mohammed bin Salman over there in Saudi Arabia, where how fitting is it that they have their Aramco? This actually kicked off basically the same day all this financial crisis stuff kicked off, where you had what was it, September 17th? You had when all the drone strike stuff happened, the price of oil shot up. That was fantastic news if you were the Saudis, because then all of a sudden it made their IPO price pop up, and then now that
Yep.
they've got the IPO price popped up, what they do? There's been a huge, massive shock in terms of demand because now of all the coronavirus and the travel being cut. So on that one hand, you've got that thing working against oil, and on the other hand, you've got the Saudis who are now going into the market with a massive supply shock and basically saying we're willing to drive this down lower, which can then consolidate their competitors, I can say enemies, competitors into and get to the point where they don't really care. I mean, they've got the ability to be able to withstand this, and so they want to cripple their competition. And this also then helps keep this whole debt carousel going round and round and round, because the average person, I mean, who's out there, they have to spend a lot of their money on energy, and so now that's going to be able to help them out, keep this debt carousel going. The low rates that John and I have been talking about, and basically forever, and it feels like forever at least, that's also helping keeping this whole debt carousel going round and round and round. And
But there's a big but there, though, Tim, because even though the oil prices are down drastically, gasoline prices will drop. Should drop heavily, but they probably won't drop as heavily as we think they would. I think that it's not going to rescue the amount of debt that's in the economy, because there's so much debt, Tim. People are just loaded up with debt, and even if they got a slack on 0.5% that the Fed would suddenly cut this week if it worsens tomorrow. I think personally, I don't think they're going to catch too much of a breaker, unfortunately. And of course, the massive lack now of demand for oil, because the economies globally are just slowing down massively, and especially with the coronavirus. Yeah, everybody's shutting down their economy. Like it was just Italy. Northern Italy is doing Chinese style, mass quarantines of 60 million people right now in Northern Italy. And actually, the stock exchange is still open in Italy, but it was down as much as 11%, almost 12% this morning. But that was in Milano. And of course, Italian banks, me and Josh are reporting on Italian banks for forever. Montepaschi di Siena, for example, is the oldest bank in the world. Has been struggling. They've been trying to consolidate. It was UniCredit. It was another San Paulo, I believe, that tried to buy them, but then they couldn't merge. So it's like almost like the Montepaschi di Siena has turned into a Deutsche Bank of Italy, where they're really struggling. I just shared some price points with the Deutsche Bank as well this morning. They were hitting record lows again. So. You're really seeing the banks are getting hit now. It's not just the air travel stocks, the hotels, the travel industry that's getting hurt now. It's actually the banking system, because they are the ones that have borrowed so much corporate debt to everyone, and now you're seeing the strains that you're going to have on that corporate debt that has been so over leveraged. And I haven't been able to find this like the actual up to date numbers as of today, Tim. But last time I looked, it was Bloomberg shared an article, and I think I shared it like a day or so ago, where they actually had a chart that showed the leveraged loans index value, and it had dropped to record lows right now, as low as 94. I think the leveraged loans are seeing a strain here because of all the corporates that are struggling right now with the whole coronavirus impact on the economies around the world. And I think we're going to see some, and there's a reason, Tim, why we reported, what was it, our third episode, where we reported on the Black Swan, the CLO problem, which is the leveraged loans and corporates. And I think we're going to see some more heavy pressure on that over the next couple of days here. And we might potentially see that, I don't know, if we really if the U.S. is going to go into a recession, which they're very close right now. The Germans are in a recession. Italy is in a recession right now, technically, because they are 20% drop right now in the stock market. I think we're going to see a lot of strain on that corporate debt that is so heavy over leveraged, and of course. I don't think any share buybacks is going to save this, Tim, to be honest with you.
Yeah, no, I don't see the share buybacks saving this either. And I'm just okay. I was just moving a few things in real time, and if you guys want to catch all this action, you go to the Bitly link that you see on the screen right now. We've got tons of different stuff going on, but right now I'm taking a look at the chart of the S&P 500. We're down at 2,792. It's funny, it just moved to me as we're doing this, and just trying to look at this. Basically, we're right around the same spot they were at May of last year. So you're looking at you've wiped out basically an entire year's worth of gains in the matter of a couple weeks. Even guys like now, I've got the bonehead Jim Cramer over there, even talking about how we're going to be into some sort of financial crisis going on. So even Jim Cramer.
Well, didn't he call for investing in gold too, just a couple of days ago?
I didn't catch that one, but here we go. It's CNBC's Jim Cramer. This is more chaotic than the financial crisis and could finally kill the bull market, which is funny because I remember it was, what was it? It was, this is not to take a victory lap over here. I want to help people. I want to save people. When you guys end up investing with me, I'm able to take that money, invest back into, I'm just looking at right now, we've got a girl who's helping us out who can help video edit stuff, pushing stuff out. I mean, it takes a lot to get all this stuff going, plus working a full-time job. John's got a full-time job, and we would love to not have. I mean, I do love my full-time job, so I'm not speaking for John, but I'm speaking for John here. He does not love his full-time job, and he would like to be doing more of this stuff. And the other people we help out in terms of Josh, as you guys become clients, I invest my resources back into the media operation that we're trying to build here, and it's not so we can become celebritarians. It's because we want to help change the world. We want to help expose the Federal Reserve, help expose what all these criminals are doing, and one way you can do that is by having money. But let's take a look at what I've actually called the first time I talked about my investment strategy on air ever. It was a client video, October 3rd, 2018, which right at the same time, I remember Jim Cramer talking about how great things are going, and about how, we got to, basically guys like John and I are crazy and don't listen to us. Well, that day I laid out what my strategy was, and effectively what it did was the people who got in, right around that time when everything went down in Q4 of 2018, they were protected. They had got almost all of last year's gains, and then this year they're all sitting pretty because our strategy works a lot. It's not insurance. I want to put that out there, but it works a lot like insurance where, let's say you've got a certain deductible and let's say you cause $1,000 worth of damage and your deductible's $1,000. Doesn't really matter. But let's say now you burn your house down. Well, now you're gladly going to pay your $1,000 to get your, $300,000-$400,000 house built back. That's a lot like how our strategy works right now. So we've already well met the deductible like 2 weeks ago, so to speak. And now as the market keeps going down, our hedge then offsets that the amount that the market's going down. And what we've seen is we've seen some of those hedges go up nearly 300%. We bought them in at $16-17. They're trading around $58 last time I checked. Obviously, this goes on second by second. And the strategy that I'm talking about, you should not try to get into that strategy if you don't know what you're doing. Unfortunately, now you're trying to buy fire insurance while your house is on fire. Not a good time to do it, but there is things that we can do for you. So I'm not saying this to take a victory lap. I'm saying this is somebody who put it out there. Really, when you're putting this stuff out there, you are vulnerable. Almost no financial advisors have the cojones to really put this stuff out there and to have it work. So I mean, if there's two videos you guys want to check out, it's the Anarchapulco speech I gave. Was it February 11th? And then which also that same day I gave a TDV question and answer, which John was sitting there in the front row, and they asked what I thought Bitcoin would do in a financial crisis, and I said during the early days of the crisis, I would actually expect Bitcoin to go down by just as much, or if not even more, than the financial assets. And that was that a very well received, very liked comment in that type of room? That was not a very popular answer for me to give, and that's basically what we've seen. We've seen a bloodbath going on in the cryptos, but the people that yep, sorry, John.
And the reason is, Tim, is because people need to they need to pay their margins. People have been levered up, or they need to cover losses, right? So they need to sell off whatever assets they have in order to cover them. So it's pretty natural, actually. And I've been calling this forever as well, Tim, where I said that Bitcoin will eventually go down first, because people will need to make up for all their losses. And of course, when there's at the end of the panic, where everybody is like, well, now we still have some money left, we're gonna have to panic and then get into something else. Then you see actually that they're getting into the safe haven assets, which be crypto for bank. I call it bank run insurance, and then of course precious metals, which is heavy on the side of insuring your wealth and making sure that is. So that's where you're gonna see the move when people are in FOMO panic. and they still have money left, so they're gonna move out of the markets and even plummet further in the markets. But then you see start a tick up in the asset price, and I believe that cryptos will very likely follow that as well.
Yeah, and speaking of tick up in asset prices, right now I have on the screen Boston Fed's Rosengren says Fed may soon have to buy stocks. I mean, so there you go. I mean, complete banana republic, just without the bananas. And now they're talking about the Federal Reserve buying stocks, which is something that, Bank of Japan is doing, that we've been talking about famously for, actually not famously, but we've been talking about it for quite some time, how that's actual fascism going on. But I know John is at work, and we just wanted to be able to get this information out to you guys. This is still a relatively small channel, so if you guys do share it with your friends, and right now I'm talking about the Tippett Show at the Liberty Advisor channel. So if you're watching this on Wham, we would appreciate either going into the Discord or joining our emergency text message list, or or signing up for the Liberty Advisor, because Josh, we were posting an article we had yesterday, a report we shot yesterday, so we didn't want to interfere with him, so that's why we're going live on this channel. And then soon we'll get John a channel as well. We're working on that with him because I want him to build up the economic truth over there as well. But any last parting words? I'm sure we might even come back even potentially even later on tonight as things start to materialize.
I would say so. I would say it might be needed, because we'll see where the Asian stock markets are later on tonight, maybe around 8 or 9 when they actually are trading. So we potentially might see some even bigger hits. Just one thing, you were talking about actually, buying stocks. The Fed have said that. Well, I had an article 2.5 years ago where I called it out. I called it the Japanification of the central banking, and of course. In that article, which was named "The Fed Will Own Everything, Then Nothing," which is now almost 3 years old, I predicted exactly what he is saying, that they're going to buy stocks. And they're not just going to buy stocks, they're going to buy ETFs, they're going to buy real estate, they're going to buy any asset that they can to try to prop it up, as the deflation is getting really heavy right now, because on top of having this market crisis, we also have a massive retirement massive piece of the population that are in retirement age, and they need to sell their assets as well, Tim. And that is where the biggest risk here is over the next year now, when all these, like, we're starting to hit the peak now, and we're really struggling because the younger population doesn't trust the stock market for very good reasons, and who holds and also the bonds. So you're seeing they hold all the bonds and stocks, and then of course they need to sell, and a lot of them go down and downsize the housing that they live in. So these are massive deflationary pressures on the economy, Tim. And I don't think that the current generation Z and the millennials is going to be able to pick up the slack there, Tim, to be honest with you. So it's just going to keep a massive deflationary pressure. And of course, in the 2002 speech, which I had on my presentation about the Federal Reserve and what is coming with cashless, but I also predicted negative interest rates for most of the world. In that article, Ben Bernanke said himself, that if deflationary pressures comes in, we could keep comfort in that the logic, he called it the logic of the printing presses, will kick in and kill any deflationary pressure. So there you go, Tim. That's what's going to happen. We know where the Federal Reserve is going. And actually, I don't think you mentioned, Tim, the 150 billion dollars repo overnight now that they're doing. They opted that, of course, up from 100, because there's just more and more pressure. And then, of course, all the term repos that they're doing, which is massively oversubscribed. I predict that they're going to up those quite heavily over the next couple of days as well. On top of that, you might see some more heavier and some more implementations of what they call the outright purchases, which they've done. I think they bought something around the vicinity of $150 billion right now, which is really QE, but they're not saying that it is. But it's $150 billion of treasuries and mortgage-backed securities that the Fed has bought in what they call the outright purchases operations as well. So I think, Tim, we're in for some very, very interesting week again. And I think that, people think that this might weather over. Remember back in December, it weathered over quite quickly. This one is not weathering over quite quickly. We're in the second week now. Actually, the third, is this the third week, Tim, that we're on right now, I believe, or no?
Yeah, I believe it is the third week. So I mean, it basically ramped
Yeah.
up as soon as we came back from Anarchapulco. And right now, let me just pull
Yeah.
up on my screen right now because I do have the repo madness up here. The daily overnight repurchase agreement or repo operations will increase to $150 billion from $100 billion, and the 2-week operations on March 10th and 12th will increase to $45 billion from the current level of $20 billion.
Also the term. Okay, so they're upping the term quite heavily. So yeah, okay.
Yep,
So
and they
there you go.
accepted almost
Just what I
113.
said.
Yeah, they accepted almost 113 billion dollars yesterday. And then you were mentioning
I did
earlier.
not see that, by the way. That was just my thoughts, and of course.
And there's very few things that get by John Sneisen, so this is such a dynamic situation. Another one that I saw today on CNBC or CNBS, as I like to call it, which I never even watched, but today I'm like, you know what? Let me turn it on for 3 seconds, see what they're talking about. And across the screen, I'm gonna have to look at my phone right here, but it said, what does it say? I believe it said there was a 17% chance that the rates were gonna be negative by July. And if you guys just 15%, sorry, I was giving you guys fake news. Maybe now it's 17, but a 15% chance of negative rates by July. And you and I had a podcast in June. It was a prequel to the Tim and John show where we were basically saying that not basically we were predicting that, and one of the comments was like, what do you guys know? Like, do you guys have some sort of fortune tellers or something, some information that we don't know? And now you've got even CNBC talking about it. You've got the president talking about it.
Well, Tim, the elites were telling me this story in their books, in their literature that they're writing, and so it's pretty obvious what they're gonna do. They're gonna do exactly what they're saying that they're gonna do in their books that they're not sharing with the general population. They might say something 360 of that, in a public setting, but in their books they're saying that they want to go cashless, they want to have negative interest rates because that's the only way out currently, and it's just pure stupidity. Like negative interest rates, it's like we're basically negative right now in the U.S. if you calculate for whatever inflation is right now, and so it's I don't know, Tim. I think we're like, since it's now on the third week, I think this is it, Tim. I just have a feel like I just can't see how they're gonna recover from this right now.
Let's tease them with that, because I do have to get going because I've got meetings and other videos we're putting out today. But we definitely appreciate you taking a break from your job to break it down for everybody. And these are crazy times. We'll be back again. If you guys want to become a client, you've got the links down below. You've got thelibertyadvisor.com. Check us out in the Discord. Check out the videos I put out the past 3 years. Because it's one thing for someone to Monday morning quarterback this. It's another thing that somebody actually talked about this stuff, got their clients the gains on the way up, prevented their clients from losses on the way down. Because a lot of people are talking this stuff, and they've been getting crucified in the markets the past 10 years. I've been going up. I was also in 2008 in the class that won the national competition on the Federal Reserve. Also was running the endowment fund that lost the least amount of money in 2008 because we put it almost all in cash right before the market crashed. And then the kids that inherited my account, that fund, ended up getting all the credit for that because I did, I almost said retire, but I did graduate right in 2008. So, I was sort of involved in that one as well. But anyways, lots of good track record. Definitely appreciate you coming on, John. They can find all of your stuff at theeconomictruth.org. And if you guys want to make sure you catch everything we're doing live, you can join us in the Discord because we put notes out there. And then also join us on the Liberty Advisor channel. But until next time, Tipicho and John Sneisen with World Alternative Media. Find the truth, be the change.
Be the change.